Time for Money Monday with Peter Fraser, certified financial planner with Credential Q-Trade Securities and the Alterna Wealth Management Group here in Ottawa. And your topics today, inflation and rising interest rates. And it's time for tactical adjustments, Peter. Whatever do you mean?
Whatever do we mean? Those twin dragons, Rob. Yeah, I think there are some things we can be doing, especially as the year winds down. But, given that we're staring down another interest rate hike this Wednesday, maybe even another one in the New Year's, we've got to acknowledge that interest rates and where we're going, we're not there yet. So, and inflation seems to be tapering, which is good news, but it's only the pace that's moderating, and 6 or 7% a year really hurts. So I thought we could look at some tactical things that I think can offer a better sense of control in times like this. Certainly people are feeling anxious, and it's just true that for the most part, many of us haven't experienced these twin hits at the same time either ever or in quite a long time. So let's take a look. And number one is perspective. I think it's important to remember that those stellar market returns that we all enjoyed, and we did, but they weren't going to last forever. And in times like this, I think it's also helpful to look beyond the things that we're being exposed to with our gas and grocery buys these days, and take that same approach. I believe, this too shall pass, and that today's high inflation rates and inflation and interest moderation will start to work in our favor in time.
Okay.
The
stress test.
The stress test. That's my favorite tactic, actually. This is where we roll up our sleeves and we run some personal worst-case scenarios. Nothing stops you from raising the inflation rate that you're currently using in your financial plan projections. Maybe try modifying that to 4 or 5%. While you're at it, you can lower the rate of return expectations on that portfolio. Try dropping those to 1 or 2% and take a look at what those changes do for your outlook. And I think this is important, and it's also really doable, and it's helpful because when we do this proactively, you get to consider, okay, well, what choices might I make if these impacts affect me for a while? Maybe less travel, maybe delaying a money gift to the kids, maybe putting off a major expense. So it's a great way of being in control, being ahead, and, planning for worse and expecting better. Number 3 is a quick one. Just take a look at the year ahead and, what a next year's spending plans look like. How might our income streams need to be modified? And, of course, we touched on this a couple of weeks ago, but it's also a good time for year-end tax planning. There is some joy in bad markets to the extent that tax loss selling might be something we're looking at. And the fourth item is a good one, whether we take another look or your first look at those CPP and OAS discussions, Rob. There is, from the federal government this year, a decision to boost OAS payments for those who are 75 and older, and those are going up by 10%. So, that could be another great weapon in an inflation-fighting arsenal. But, maybe the checkup is just to ensure that you're not going to take it now and go with the more for later down the line option. But that's worth taking a look at in times like this. And the last part, probably your favorite, is a portfolio checkup. Inflation sometimes offers asset classes that are better than others as a bit of a hedge. So, real return bonds, for example, gold, sometimes other commodities offer us some relief that might take a look. But I want to take a minute and just talk about a little piece of architecture called dollar cost averaging. And this is a tactic that actually helps de-risk entering or re-entering the market. So it adds the safety and the wisdom of time diversification. So in this case, we just buy into the market at whatever level it's doing. We do it regularly. We do it the same amount. And it really helps put market volatility to work for us advantageously. I liken it to paying a bill. So just make a regular contribution, resulting in actually the lowering of the cost of your investments over time. It's a great, great tactic. And Yeah, so I mean, I don't think we're in normal times, but even in normal times, our emotions can dictate how we respond. But even this challenge, I think, can have a silver lining or two, a couple of solutions and options that, help us step up our game, put the plan under a magnifying glass, and get your advisor to roll up his sleeves or her sleeves with you. And I think those things make good sense.
Plans and portfolio protections. So, Peter, if people, are hearing this, and I want to take advantage of Peter's wisdom, I'd like to know more. How can they get in touch with you?
Well, today's tactics and a warm welcome are available for anybody who wants to head over to Money Mondays at Alterna.ca.
Great stuff. Thank you,
Thanks,
Peter.
Rob.
We'll talk next week on another Money Monday. That's Peter Fraser from Q-Trade, Credential Q-Trade Securities, and the Alterna Wealth Management Group here in Ottawa.